Hey guys, I just wanted to do a quick little review on the trade that I took this morning. What you're seeing here is my actual entry. Right here was at around 8:45. It was at the price mark of 55.09 and a quarter. All of this over here was me messing up my entries. I was copy trading on an account that I didn't mean to, so I had to get in, get out, and get back in over here. So 55.09 and a quarter is where I ultimately got in. I am going to switch over to TradingView now so we can look at the cycles indicator and I can walk you through my logic of what framed this trade. Okay, so what we're looking at here is the same thing I always talk about in terms of inside cycles, parent cycles, that whole bit. So right here we're seeing at the end of yesterday you have AM session here and PM session had relative equal highs. There was like one tick above that high. I'm still considering that an inside cycle. So I draw out that high and I draw out the low of that. The high and the low of that parent cycle are your liquidity pools that you're looking for your entry at. And as you can see, we came down here and souped that low before we started moving. But more importantly, if we zoom in and look at the fractal nature of how things work, you can see that right here we have the same inside cycle pattern playing out on the 90-minute cycles. And that was my clue that we wanted to get in. We had this tight consolidation, just almost flat, then a break down below where we came down, and again, with the fractal nature of the market, we formed that low and souped that. As soon as we souped all of this and closed back above with that very bullish candle, that is the sign that you want to be getting in. Now, the way you look at this in terms of targets and what you want to look for, the rule of thumb is that when the low of this cycle gets taken, you want to see the high get attacked. Like this. We took out the low down here, we came back up and took out the high here. If you want to be safe, you can target the equilibrium of that range. There's about a 90% chance that it will get there at the very least, even if it fails. So take partials there, go full off there if you are just looking for low-hanging fruit. What I took as my exit was Asia high here. Obviously it was safe to keep reaching up here. Now, one thing that I didn't realize, I missed this when I was framing my trade. If we zoom out even more, you see it happening again on an even larger scale. You have this cycle, the PM session of Friday is actually a parent cycle to this guy here, the London session on Monday. So you see that it took out that low, it came back up. It didn't quite get all the way, but it did get to equilibrium just about. We come back down, we form this other parent cycle mechanic here and again down here in that fractal area. We soup that, we start moving higher. We take out the high of this parent range and then keep going, and we finally today take out the high of this parent range that was formed on Friday. This is something that you see all the time, like 2-3 times a week. It is a reliable setup, especially when you pair it with all the things you guys know and love already. You know, you've got your turtle soup, which forms an order block, which ultimately forms the breaker here. So that's another way that you can anticipate the breaker happening. When you have all of this lining up at the same time, at the right time, again, a 45 to 15 window, that half-hour window of the switch over from one hour to the other. That is where you want to be framing your entries. You want to be looking at that and try to capture the wick of the next hour forming. And that's what we saw happen here. So start framing your trades like this. Start looking for these cycles where you can just have a clearly defined high and low where there's liquidity on both sides. And you know that when one side gets taken, we're going to be rushing to the other side pretty quickly.